Luxury properties in South Africa will keep you poor, and here's why. In this video, I'll reveal the 5 hidden pitfalls of investing in luxury property in South Africa and why it's actually draining your wealth instead of building it. By the end of this video, you'll understand why smart investors steer clear from investing in luxury properties and where they invest their money instead. Without wasting any of your precious time, let's jump straight into it. The number one mistake beginner investors make is buying property based on emotions. Let's face it, we are human beings and we make our decisions based on emotions on a daily basis. But when it comes to property, we should focus on making decisions based on numbers and data. Instead of thinking with your heart, you need to think with your head. So the first reason I avoid investing in luxury properties is because it's expensive to register and transfer. Just to register and transfer a property that is worth, for example, 4 million rand will cost you a small fortune. This is money that a very small amount of South Africans actually have to spend on registration and transfer costs. The cost would be around 400,000 rand just to buy the property. The registration and transfer cost alone is going to cost you the price of a small flat in Bloemfontein or in Gauteng, so it's really expensive to own luxury properties. It just doesn't make sense to spend 400,000 rand in the short term just so that you can say you own a luxury property. Just think of what you can do with the 400,000 rand instead of paying it for transfer and registration costs. Simply leaving it in a money market account will yield a much better return. The second reason I avoid buying luxury properties is because you can't buy them at a discount. If we have a look at the properties listed at this price class, most of the time these properties are in great condition. They are probably newly renovated or newly built, like new developments, so that just means we can't negotiate the buying price. Like I always say, you make your money when you buy, so if we can't buy a property at a discount, we're not making any money from day one. Just imagine buying a property for 4 million rand. The chances to get a 10% discount on a fancy or good looking property is very small. That just means you don't have any negotiating power when it comes to investing in these luxury properties. And of course it makes sense because you can't negotiate a selling price if there's nothing wrong with these properties. It needs no repairs, there's no maintenance needed, it's probably in a fantastic condition, and that is exactly why I avoid them. Then we get to the third point. Luxury properties is expensive to maintain. If you compare the maintenance on a traditional property below, let's say 1 million rand, compared to something worth 4 million rand, the maintenance cost and the repairs cost on these luxury properties is double or even triple the amount of a normal property. Just think of the kitchen cupboards, granite tops, kitchen appliances, bathroom fittings, and any other features that is really expensive to maintain. Just imagine the cost of a normal floor tile compared to the tiles people use in luxury properties. The overall cost to maintain a property just based on the normal wear and tear items will be significantly more compared to a traditional property. At the end of the day, it makes sense why these properties are listed at premium prices, because stuff like paint is more expensive, appliances is more expensive, basic fittings like toilets or tubs or showers or kitchen cabinets is a higher grade material, meaning it costs more money. If something costs more money to buy, it's going to cost you more money to maintain. Then the fourth reason I avoid these properties is because your demand in certain areas is much less. If we have a look at the people in South Africa, majority of people can't afford to pay rent more than 7 or 9,000 rand a month. It's a very small amount of South Africans that can afford to pay 30 or 40,000 rand in rent per month. So why would you focus on a very small audience if you you can focus on a much broader audience. Before we get to the last pitfall, like many of you might know, this is the third year that I've been doing YouTube, and to show my appreciation to you guys, I decided to give away a free one-on-one session. This 1 hour session would be a great way to help you reach your goals and to get you to where you want to be. So if you are interested, you should follow the next steps. Follow me on Instagram, Facebook, and on TikTok, and tag me in a post or a story sharing my YouTube link. Just remember, you need to follow me on one of the platforms, and you need to share either my YouTube profile link or the link of this video for me to be able to track who will win. With that said, a last reminder that my course and coaching programs has a massive 50% discount until the end of September. So if you haven't enrolled yet, make sure to check that out. That brings us to the last pitfall, and that is that luxury properties barely passes the 1% rule. The 1% rule is simply a rule of thumb that I use to quickly analyze deals, and it's by no means the only calculations you need to do. But it's a simple and quick way to determine whether a property will create cash flow or not. So that simply means you take your monthly rental income and divide it with the property purchase price multiplied with 100, and if that amount is not above 1%, that means the chances of that property to generate cash flow is non-existent. At the end of the day, these luxury properties barely reach 1%, meaning it will never be able to create cash flow. Like you guys might know, I like to focus on cash flow because that is the easiest way to grow a successful property portfolio. These are the 5 pitfalls that costs a lot of people a lot of money. What I would do instead is the following. I would focus on buying property based on data. I would make sure I understand the numbers, the areas, the valuation, the rentals, and all of the expenses involved in the property. Make sure to make decisions based on numbers and never on emotions. The second thing I will do is to buy properties below 1.1 million rand. If you buy a property below this price, you won't have to pay transfer duty to SARS, and that means your overall cost to acquire the property is going to be much lower. Just compare the cost of a 1 million rand property to a 4 million rand property and you'll see the massive difference. The third thing I would do is to buy something that needs a bit of work. If you can find a property that needs a bit of attention in a great area with high demand, you will make money from day one. This is something that I love to do, is to renovate properties and just give it a better look so that it attracts a better type of tenant. This is an easy way to build equity and to increase your net worth. The next thing I would do is to focus on buying properties that can actually generate cash flow. This is where you will have to understand the return on investment calculations, and if you don't know what I'm talking about, I'll share a link of a video where I explain this at the end of this video. Cash flow is king, and focusing on properties that can generate cash flow will help you to grow your portfolio much bigger than if you invest in shortfall properties. The last thing I would do is to target the middle class. South Africa's middle class is of course shrinking, but let's call it lower to middle class people because the demand for these properties is just continuing to grow and grow. By following these 5 tips that I just mentioned and staying away from luxury properties as a beginner, you will succeed in property investing. Just remember, succeeding in property investing is not about owning the most luxurious properties, but it's about owning properties that can actually help you reach your goal to financial freedom. It's about getting properties that can generate cash flow, increase your net worth, and help you reach your goals. Feel free to let me know if you have any questions about this video. Don't forget to like and subscribe and share this video with people that you know will benefit from it, and maybe they're considering buying a luxury property. Maybe they just need to watch this video first.